Okay, I think we are good to go. Let me check 1 2. Let me check 1 2. Okay, we are live and clear. So good morning, good afternoon to everyone, wherever you are. Let me hope you are doing well, and welcome back from weekend. Yes, I believe it was nice to you all, because the market was performing well. I believe we all made some good money, mostly for those who were trading. I know most of you are not trading. Hey, you are not trading, but it all is well. As long as you make some money, then the rest is just history. But even though you are not trading, by the way, even though you are not trading, at least you keep learning, because one day, one time, you will have capital and you fail to use it. Do you know that you can be having capital and you fail to make money? Yet, for those who are not having good capital, they are making money. It is 100% possible. Just at times, for you, whenever you don't have capital, you feel like, I don't even need to attend classes. Classes are very important, because through learning, you can definitely keep gaining experience, knowing your errors, and when you get money, I believe you cannot repeat the same. You get a point. But when you go away from trading, or if rather from learning, or if you fail to keep learning, then that means at the end of the day, even though you have capital, you end up missing out. You get a point. So today I wanted us to share the margin calls, and at the same time we look at the chart. Okay, which strategy are we supposed to use according to the signal, according where the coin is? Yes, I want us to look at that, because I believe most of us, we don't understand why and which strategy that we are supposed to use, okay, and when. You get the point. So we need to understand that before we go further, because that is the starting point, or that is the foundation of this business. Because if you don't understand the margin calls, if you don't understand market analysis, then for sure there's no way how you will definitely make money. I believe you agree with me. Okay, let me pin my screen here. Okay, so allow me to share screen here. Then I'm going to join with the phone, because my Rocho is on phone, so I have to use it. I have to use the phone. Okay. Just a minute. Okay. Is my screen on yet? Let me hope my screen is on.
It's on.
Okay, that's great.
Yeah,
So
it is on.
here we go. Currently, we have two strategies that we are using. Okay, therefore, we need to understand when are we supposed to use those strategies. Not every time you keep using them anywhere. So to differentiate them, it is the best. No, when are you supposed to use the double up? When are you supposed to use the other strategies we used to use? I don't know how we can name them such that we can always understand them better. Eh? Can we also have the name for the strategies that we used to use? Oh my god. Because at times when you are explaining, you feel like, oh, you are failing to make them understand what exactly are you meaning. I think by showing you, you can understand, but when I'm teaching here, at times you may fail to understand exactly what am I meaning. But I think we have to look into that, and we also get the solution for that, such that we can simply understand the two strategies that we are using currently. So first of all, we have been using this let me see, this strategy for double up. This one, let me get my pen here. Okay, so we have been using this. Someone was asking me about double up. My friend from Nigeria, friend to George, are you around today?
Yes, I am.
Wow, that's good. So if we talk about the double up, this is the double up strategy that we're talking about, and that this is what we have been using, most of us. This is one of our strategies that we use, okay? And it is having advantage and disadvantage, of course. Everything is having advantage and disadvantage. You get the point. Now, for the case of double up, if you don't have good capital, it will be tough for you to use it. Why? Because it is doubling your buys. If you buy with $10, next time it is using 20. Next time, next margin it is putting 40. Next margin it is putting 80. Are you seeing this? It keeps doubling. The first one was $10, second one 20, third one 40, then fourth it is 80. Then that means the next one will be 160. Why are we trying to use this strategy? We have what we call the average price. Let me show you something here. I want you to pay attention on this. Okay, I'm going to show you. For example, here, this is my running coins. You know me, I don't normally overtrade. These are my running coins, and I have here 2 as well. So it means I have 4 coins that are running. I think I tried to put those of today. Another thing that we need to understand, we don't need to trade every day. When you see that the market is not favoring you, don't trade. Wait for the next day. I believe the next day will be successful. Why not? Are we getting a point? So therefore, let me show you. This coin is holding my $500. When I open it, we have this point, or this side, where we have average price. Average price. Average price, it's where we buy this coin from. The price was at 0.60, then to 8. Okay, but currently it is at 0.5478. Are you seeing the difference? Meaning the average price is a bit high than the current price. But while you are using the double up strategy, it will be reducing your average price closer to the current price. Am I making sense? Am I making sense? I want us to understand the strategies we are using. Yes, we get the clear picture. We get the clear picture. Okay. So, just a minute. I wanted to remove this and pin one. No? Okay. Let's go. So, when you are using this strategy, it will always keep reducing the average price. And whenever the average price is reducing closer to current price, meaning anytime you are getting out from the floating loss, that's what it means. You get a point? But whereby this strategy needs money. And I know most of you don't exceed 4 margin calls because your money is very small. Someone was asking me, is no longer selling margin calls. But you know, the other strategy that we are using, I used to have some sub sales. I could make like $10 from sub sales. But as we speak, I don't sell any margin call. Are you getting the point? Yes, you are not selling any margin call because you are using the double up strategy, and whereby you had bought only 4 margin calls. Okay, 4 margin calls. So, for you to sell what we call the sub positions, to sell sub sales, you need to be having more than 4 margin calls. 5, 6, up to infinity. There you can be seeing the sub sales. You can be in negative 50 while you are making money from this negative, because you have what you call the margin calls. So, on this strategy, MC means margin call. That means if we say MC2, these are 2 margin calls. This is 1 margin. This is 3 margin calls, like that. Okay? Then, this is the number that we use to do, we get our capital. If your capital is 200, you get your 200 divided by 3. Are we getting the point? So, what we get, it is what? It is our first buy. Am I making sense? If your capital is 500 and you want to buy only 2 margin calls, 2 margin calls is in the second line. Therefore, you get your 500 divided by 7. First, know how many margin calls do you want? I want 4 margin calls. Then get your 500 divided by 31. Are you getting the logic here? So, the number that we are going to get, it is the first buy. Then we are going to buy 4 times. For example, now if we go to our calculator and we get 500 divided by, it was 31, okay? We get 16.1. We can ignore 1. We take 16. So that means if I want to buy 4 times using double up strategy, my first buy should be 16 out of my 500. Remember, The 500 you want to invest all of it in one coin or one token. You don't need to use your 500 even though there is balance. If we have allocated the 500 to be catering for one coin, then there is no need to enter for second coin unless you have another 500. If you decide to use only 300 to invest in one coin, that means each coin will be in need of 300. Are we making sense? Therefore, if we get our 16 times 4, and remember we will be buying doubling up. That means here, let me show you. Let us come back here. Strategy. Where is it?
Oh, brother, you back?
Please, Mike.
Even Sunday you work?
Mike.
Sunday.
Your microphone.
Yesterday.
Off.
Yesterday you work?
Look at him. Let's come here. The double up we are talking is here. We have 4 margin calls. That means here we have 16. Are we together? Here it is 16 times 2. Here it is 16 times 4. Here it is 16 times 8. Here, because we have 4, it is 16 times 16. When you add up all that money, you will get the total of your $500. That is the side of double up strategy. Not only focusing at times, but again drop is also important. Drop is also important. Why? If you come here and you start putting your 1%, small 0.5, you are finished. The double up will not make sense. Here, we normally have the default settings. Let me put the first one and you see 4 margin calls. And we look at this. Can you see? It is having 16 and here it is having 5. But here on drop, we told you at least you can have 25 at least. If you add them, you should be having 25% if you add them together, these ones. So it's up to you. It will be up to you. Now here you can start small, you increase until you get the total which is more than 25%. Hope I'm making sense to you guys. We are having this. You have already calculated your capital, that it is there. If you want to use 300, then you go and calculate what will be your first buy. If you want to buy on a 3 margin calls, then go and look at our strategy. If you want to buy 3 times, how which would be your first buy? You get a point. Now, whenever you are doubling up here like this, the average price will be reducing on high speed closer to the current price as a must. Are we together? As a must, it will be getting closer and closer and closer. At the end of the day, you get out from the market. But we have different category of people that think differently as well. For you may be happy with this, and another one we may feel like, okay, me I'm ready to buy 50 margin calls. I am ready to keep in negative 50 while earning something. Yes, we have that category of people. And you cannot stop them from using their strategies. Are we together? Therefore, this side of double up, let us first close it.
Coach,
Yes,
can I ask a question or I should let you finish?
okay, ask before I go to the next step.
Okay. The margin call that, please go back to the margin call, the margin configuration.
Here.
Okay. Yes. The multiple buy-in ratio.
Yeah.
Those numbers, are they preset? Are they fixed? Or I'm the one that will determine the numbers?
No, these are default settings for Royal Chu.
Okay.
But strictly for double up.
Okay. Okay. Now the second question is,
Yes.
when you look at the margin call drop,
Yeah.
You said it will give us like 25%.
We should get that.
But when I calculated this one you have done, it gave only 17%.
Now, that's what I was talking about. You can change these ones. You can change them. Just I was giving you knowledge that when you add them, at least gets 25 and above. You get the point? So you have a right to come here and change these digits.
Okay. The third question now is, you know when you give a signal, oftentimes I see you write 15% drop. Okay. Is it this margin call drop you are referring to?
In the signal, I normally put 15 margin call drop. Okay?
Yes.
But remember, we give this signal worldwide. You get the point? So we decided to have the uniform call drop. Though, in teaching, I don't recommend you to have the 15 margin call drop, because market can definitely drop more than 15%. But in most cases, most of our signals that we provide, they don't normally drop all that percentage. Am I making sense? But what if it happens and this coin drops up to 40%, up to 30%? Are you really ready to cover that drop? So when we are teaching you, we prepare you to know that this coin cannot only drop 15%, but it can definitely go beyond the 15%. So when I'm teaching you, I'm giving you the standard procedures, the standard strategies, such as that you don't focus on 15. Just know that is for emergency. You need to think to know that the market can definitely drop more than 15. So don't look at the signal and you feel like, oh, coach told us this will drop only 15%. No. Create your strategy in your Royal Chu, which is having more than 25% drop. Are we clear?
Yes. Then one more question.
Have it there. Let it be there for good. Knowing that the market can definitely drop more than 25. Therefore, let me create my strategy that I will be using whenever they provide signal. Whether the signal is having 15% drop, don't mind about that.
Okay.
Then
one more thing.
Yes, please.
At the margin call drop, the first call says 3.5%. Now, this 3.5%, I believe, is when the price at which we entered dropped by 3.5%, right?
Exactly.
Okay, good. Now, for the price to drop 3.5%, it might take a long while.
Yeah.
So why don't I have my first call to be, a lower value? maybe put it at maybe like 1%. Then the second one like 2.5. Then the third one like maybe like 8. And then maybe the fourth one like 15. Is it possible?
It is 100% possible, because all we want is to have more than 25. Whether you decide to put here 0.5 and you put here 1% and you put here 15 and here 10, it's up to you. Okay?
Okay, which one is better? To
now,
have the...
According to the capital we are using, automatically, to put here maybe 1%, it is better, because I'm seeing where you are looking for, what you are looking at. You are assuming that what if we fail to drop the 3.5 and we just go up? How much am I going to collect from the market? It is small. Yes, we all agree. It will be small. But now for you, what you are looking at, you want the robot at least to buy one margin call, such that you can add some money here. And at the end of the day, when you sell, you can get some good profit. It is okay. Here you can put your 1%. It is okay. Because you want to use this money at least. But at times, you can even put 0.5 and the market can even fail to drop 0.5 and can definitely raise straight away. So, what we are trying to do, it is what we call risk management. Do you want to use all your money at once and get finished? No. Make sure big percentage should remain on your balance, not in the market. The big balance should be on balance, not in the market. Therefore, if you try to change these digits and you make them very small, that means you are fighting your capital. You want money to enter in that trade, and whereby it is not necessary to buy every after 1 second. You want to buy. No. Do you know what you are doing? So you want to use 0.5 here, 0.5 here, such that you can simply buy. Then what if that market wanted to only drop 10%? Will you survive? Definitely you will stay in the floating. Why? Because you were buying on long point, on O, you were buying, how can I phrase it? Let us draw here. What we bought at this price, let us say at this level, with our $100, with $10. We wanted the market first drop the 3.5, and we buy again here with $20. And now the difference comes here. Here $10. Then now you want market to drop 0.5, and you buy at this point with $20. Okay? Now the 0.5, it is very small. It is very small. And market is likely to drop more than 25%. But now for you are wasting money and you are buying after a drop of 0.5. That means that margin call, you are wasting it. You are wasting that money at that margin call. But looking at the strategy we are having, for you, if you have it in mind that here I'm going to put my 0.5, but here I'm putting my 8, here I'm putting my 10, here I'm putting my 15. Are we together? There you are making sense. But you find someone is having 0.5 from here up to the last one. This one is nonsense. When we add these, we are only getting 2% drop. Can you imagine? So you want to use all your capital after a drop of 2%? Are you for real?
Yes.
Are we getting the image? You want to use all your capital after a drop of 2%. But in actual sense, you know that the market will definitely drop more than 2%. Then how safe are you? We are talking about risk management. How are we going to protect our capital? And while we are making money. So, my dear friend, putting here 1%, you are okay. But what about the rest? When we add them, are we getting what we want? If yes, then go ahead. But if your intention is to put small percentage drop, such that the robot can definitely use all your money, then you are wrong. The first position you can reduce, it is okay. Because you want your robot to use your money. Then here, at least it can take long to buy. And here it can take long, and here it can take long, which is okay. Hope you are clear on that.
Yes, I am.
Okay. So let's go to the next step. I want us to go to the next step. We are here. If you open your RoyalTube, it is at home point, and come here on mine. I'm trying to show you how are we creating strategies. When you click mine, it will bring these words. There are many, but for us we are looking at my strategy setting. If you click strategy setting, if you don't have any strategy here, definitely you will find their ad. But if you have, you come here in the right hand upper corner, you click that plus. When you click that plus, it will take us on this page. On this page, we want to create the strategy. We want to create the strategy according to the capital. And this time, you can create the double up strategy here or the other strategy. But now we are going to create the other strategy that we want to give the name. Here on Remark, we are going to put which capital are we going to use. As in each coin, you may be having 2,000, but each coin you want it to take only 300. Then that means the strategy you are going to create, it is for 300. It is not for 2,000. Are we together? Therefore, I will write my $300 at the top here. Then I will think about what will be my first buy. I want to use how much to buy. And I want to be having how many margin calls. So, if I come to my calculator here and I say, I need only 15 margin calls, then I will get my capital divided by the 15. That means my call, my margin call, or the first buy will be $20 with 15 margin calls. We want to gain from margin calls. That's what we are trying to do. So therefore, I will now write there that my first buy is $20. Then I come here on my first buy, I put my 20. Here I'm putting how many? How many of you are following? What am I putting there?
15.
15.
Right.
Yeah, we are putting 15. Because we want to buy 15 times. Then here, we are going to put the take profit. The normal one, we normally take the $3%. Yes, we normally take 3%. Then as long as you see the word callback, where there is the word callback, make sure you put 0.01. We are finished. We are done with that. Make sure whenever you see where there is the word callback, and we have this percentage, put 0.01. Just cram and pass. Cram and pass. Cram, forget and pass. What are you talking about? So, at the end here, we have this word cycle. Make sure you change it to one shot. Click there. It will bring one shot. We are creating our strategy under one shot mode. If you keep it in cycle, it means immediately after sale, it will buy again. And you don't want to buy again. That is one shot. Okay? So, from there, come here. Where there is the word margin configuration. Open it. Now, this time, we have many margin calls. They are 15. Are we together? They are 15. They are 15 here. But the mission is to have more than 25%. Are we clear? The other side of double up strategy, total is 25 and above. This side, the total is the same, 25 and above. So, here, what makes it unique? It is that you have a chance now to put your 1% like 4 times, like 5 times. Then, we want to earn from here and below, from 50 score and below. Those positions are independent. It means I can sell the 50 score alone. I can sell the 6 score alone. I can sell the 7 score alone. Are we together? Even though I'm in negative 30, I can keep earning. Are we getting the difference of the two? The other one, you buy only 4 margin calls, while it is helping you to reduce average price closer to the current price. But you will not earn like selling sub positions. I want you to get the difference, and you should know where are you supposed to use such a strategies. Okay, let's go. This side, we are going to change.
Coach, please.
Wait.
Coach, please.
Wait.
Okay.
This side on multiple buying ratio, we are going to put 1 throughout. Because we said our first buy is 20. Now, when I put 1 is representing $20. 1 is representing $20. Then here I will come here and I change my drops. I will put my 1%, 1%, 1%, 1 and 1. Okay? Those are 5% drop. This is 5% drop in total for the first 5. Then here I increase, guys. I increase. Why am I increasing? I'm looking at the drop of 25 and above. That's why I'm increasing. Am I making sense? 5. Then 5 again. 0.5. Then we look at 0.5 again. Hey, where are you going? But this strategy, remember, I want you to get it clear. This strategy, will not help you to get out from floating as quick as possible. No. For it, you can keep in the floating, but while earning. That is the difference. Are we making sense? When we add them, I believe we can get more than 30. Not so? If we add these ones, we can get more than 30%. The other of double up strategy, we are having 25. This one, at least we are having 30% drop. Meaning, we can be able to buy this coin until it drops 30% while we are earning, because it will be selling. The coin will not definitely drop like this. It will drop, come back again, drop, raise, drop, raise. As it is rising, for us we are making that money from margin call. Now, this strategy, you can keep in this coin for 1 year, but while you are earning. Are we together? But if it happens, the other one who is using the double up strategy and the same coin dropped is not earning anything, and all money is in the market. Here, it dropped, yes, I'm in big negative, but I'm earning something every day. So that's why I told you, you need to know where are you supposed to use such a strategies. We are going to save this. Any question? Any question before I go to the next step? I want to show you. I want to go to chat. I show you where are we supposed to use such a strategies. Ask. Please, your question. No question?
Okay. So, coach, when we're using double up strategy, obviously this one that is showing currently, 15 margin calls, it's not double up strategy.
Yeah.
So my understanding is double up strategy cannot be more than 4 margin calls.
No.
Is that correct?
That double up you can have any margin calls that you want. But the question is, can you manage to double up to the margin calls
because
you
of my capital.
Yes, exactly.
Okay.
So it's very rare to find someone having 10 margin calls and is using double up strategy. It is very, very rare. Because there's no way how you can buy 10 times doubling it. Do you know how much you can use? It is too much. So that's why you find most of them, they are having only 4, 3. The biggest can go to 7 only. They stop from there because money. Now at the end of the day, if your first buy is 10, you will end up investing like 2,000 in one coin using just 7 margin calls. Are you getting the difference?
Okay.
Using the double up strategy and you want to go for 7 margin calls, you will need too much money, which you don't have.
Okay, coach. If let's say, for example, one wants to use the double up strategy, which part in Royal Q will we impute that? Yes, I know I'll have put it in my margin configuration, but how will, even if I put 4 margin calls, is there anything again that I need to press to confirm that I want to use double up strategy?
No, it's like this.
Otherwise, it looks the same to me, the same process.
It's a matter of knowing what you want. Now, let me show you. If you come here, when you are trying to add the strategy, automatically here, the default settings for Royal Q, it is always doubling up. What you need to change is this drop only. If you decide and say, okay, you know what, I need only 4 margin calls, and you change here to 4, and your first buy here, you want to change it to 10, okay? When you go back there, you will find that your double up is already there, the drops are already there. You need to change some drops. Simple. And
so Royal Q,
you said you are take profit and the drops, and you trade under one shot.
Okay. So that means when I go and pick any margin call up to like 7, automatically Royal Q assumes it's a double up strategy I want to use.
Yes. For you just
okay.
Need to change
so it's now left for me. It's now left for me to impute 4 margin call limit. Yes. And once I impute 4 margin call limit, Royal Q will automatically bring the margin configuration for 4 margin call using double up strategy.
Yes,
automatically.
Yes, it is automatically, but at times you need to confirm whether it is there. You just click and confirm. If it is not here, then you can put it there. Simple.
Put it, yes. Okay. I get you now.
Okay.
Oh, I'm happy. I'm happy to learn this.
Okay, so let me stop sharing from this phone. I share on laptop, then we can learn something as well. Where are we supposed to use such strategies? Okay. Let's go here. We share screen. We have a few minutes. Is my screen visible there? Okay. So when we look at this coin here, I shared it in the morning. But I want first to remove this. Let me first remove the indicators first, and I give you the reason, and I show you which strategy could you use here. First of all, we need first look at the previous low. Previous low. Where is it? I think this coin has no problem. Its lowest drop is this one. And when you look at this movement, this was downtrend. Okay, this was downtrend, and now this is an uptrend. This is the reason why it is an uptrend. Let me try to make it big. The reason why it is an uptrend, it is here. Okay. This was its lowest point here, and this was its lower high at this point. This market was supposed to drop again back. No, it is not responding. It was supposed to drop back and break this previous low. Now, let us put the line. I told you, whenever you find something, put line. Now this is our lowest point, and it is our demand zone. The market was supposed to drop from here and break this point to form what we call another lower low. But since the market failed to come back and break. Therefore, we need to identify the break of structure. Now, this is the line that will separate. This cursor is just disturbing me here. This is the line that we need to look at. After breaking that line, because this was our lower high, okay, and the market failed to go back here at the bottom here. Instead, we can see the market breaking this area here. Now, after breaking the area, now this is our high number 1. We can see market dropping down, then again making another high here. Since we have 2 highs, 1 and 2, automatically we expect another 3rd high. When we try to use the trend line and we draw, connect here and here like this. Hope we are getting the point. We can see that it is in uptrend. Therefore, since it is in uptrend and the lowest point is here down, let us measure. What is the distance from our entry to the discount level? And I show you why. I tell you why. Which strategy you can use. Okay. Now we have the 20% drop. If this market fails to move up, it can definitely drop up to here or up to here. Let me also put another line here. So we have 2 areas that we can break. Here. So the first one is having 7%. Then next one 20. Okay. Here you can apply the 2 strategies, or can work because the drop is small. Are we clear? The drop is small. But when you find that the drop is too small, it is not more than 10, you can always use double up strategy. Are you getting me well? If the drop, it is not more than 20%, it is not more than 10, you can always use the double up strategy. But if you measure and you find that the drop from where you entered from up to the next support or up to the discount level, that drop is more than 20% or more than 15, rather more than 10. Yes, let's go with 10. If it is more than 10, then you can look at the other strategy, which is having many margin calls, such as that if it happens and this market drops, you can keep making money from that negative or that drop. So the other method will help us when the market can definitely drop, can drop 2 big percentage, like 15, like 20, like 30, like 50. You can always use the other strategy, which is having 15 margin calls and above. The 15 margin calls was just for example, but you can have like 20, you can have like 30. It will be according how much you are going to use. Do we have any question? Or we go and sleep?
Okay, coach, in everything you've said now, to determine whether we will use the double up strategy, you have said if the drop is more than 10, is more than 15, is more than 25.
Yeah.
Which is the ideal? Because, I mean, 10 to 25 is quite a wide range. So which should we stick to? Should we stick to if it drops 20%, then we can continue.
We need to stick if the coin can definitely drop. If you can see that from where you entered from up to the discount level, the range is 15. You can use double up. But if it is more than 15, you can use the other strategy.
Okay, so discount level,
yes,
is the key level for us to consider.
Level. Okay. Yes, the key level. We are talking about the key levels. So I told you this is the level 1, this is the level 2. So, but to be on the safe side, you can measure all of them to get the clear picture if you can manage to buy those margin calls. Okay, it is the easiest way. Just know I'm entering here. This market can drop up to this point. Now, therefore, let me use double up strategy. Because by using double up strategy, if this market can definitely drop, like maybe, let me show you. Okay, this market can drop like this up to this level, and we can go back like up to here, and we drop again. Before we drop again, using double up strategy, you will be out because of that movement. Are we getting the point? That's why I told you double up should work when you can see that the drop is small. It will help you to get out from the market as quick as possible without asking anyone. But if the drop is too big, my dear friend, it will buy and buy and buy. Again, you remain in the floating. Now, what will you be gaining from floating? Nothing. Hope we are together. Yeah, that is it. Whether you like it or not, market will always drop and will always raise. What you need is knowledge. How am I going to deal with it? Okay? I think we are done. Do you have any question from others? Or just this class was for one person?
Me, I have a question.
Yes, go on.
Thank you so much for your time and the information. But I want to ask about the new strategy you've talked about, and then the double up strategy. How am I going to know? Like, am I supposed to make the analysis, or when you share the signal, you let us know that maybe you can use this strategy or the other strategy?
What we are trying to teach now, because we don't like spoon feeding, that when I'm no longer available, you will not trade. That's what I'm trying to remove from your head. The reason why we are going to be using these strategies, I want you to be having trading view as well. You can also check the signal that I normally share and have an idea from it. Because there's no way how I can start now saying, this coin, use this strategy. Now I'm spoon feeding you. You will not learn anything. But if I say, I have provided this signal to take 5%. Now you rush and go to your chart and check where is the support. It is here. Okay, I can go with this strategy. Just within 1 minute, you are done. You don't need to draw those lines. Support. You can just use your eyes and see the support is in here. Let me go with this strategy. Don't waste the time drawing, measuring. Use your eyes. Or we can always use what we call the smart money. It can show you. Definitely, it can show you that demand is here. So you can just look at where demand is and measure from the entry to demand. What percentage is there? Is this? So strictly, I'm going to use this strategy. Okay?
Oh, okay. Anyway, I get it. Though, Uh, do you mind sharing, because you said someone is supposed to be with a trading view, so do you mind sharing the coins that you mostly give signals on? Because it is also time, like when you don't have the coins on your list, you have to first to put the coin at a check. So I think it would be better when you send a signal, it is easy for me to tap on the coin and then see what strategy am I going to use.
I think for the case of coins, I have all coins that we are trading on Royocho. So may I have all list. So what you do, it doesn't mean that you need to add them on your list. At times, when you don't pay the trading view, they allow you to add only 60 pairs. You get the point? And you find that in Royocho we have over 300 pairs. You get the point? So what you do, you search. After searching coin and you get it, you tap on it, you open it, do analysis and leave it there. It will not be added because they will not allow you to add them there. And I don't have the pairs that I focus on. I'll check all of the pairs in the morning when I'm going to share signal, which I find that it is having my confirmations. It's the one that I will give you. So I don't have specific coins that I normally look at this one and this one. No. Me, I go randomly by checking one by one. So for you, when I share in the group, it's your turn now to go and search which coin was banana. Okay, banana. Okay, I can see banana. When I put my my smart money, it is almost hitting the discount level. Therefore, I use the double up strategy, and you move on. So that is it.
Okay, thank you so much.
Okay, welcome.
Okay, coach, which strategy mode would you now advise for double up and for this other one?
The double up, as long as you have only 4 margin calls, automatically it will be the warehouse mode. It is automatic.
Okay.
Then if you are using more than 4 margin calls, even though it is double up, even if it is the other strategy, make sure you're trading under the sub-bin mode, real-time settlement.
Okay.
Yeah.
Okay. All right. Thank you so much.
Okay, I think the rest they are okay. The rest, are you fine? I think we call it a day. We meet in the next class. Stay blessed, guys.
Thank you so much. God bless you.
Okay, welcome.